actually chased into the Zillow and ended up having like four losers.
Oh no.
It's okay. It's okay. I made it all back using doing Uber. I mean,
Nice.
like
Yeah,
trading Uber, doing Uber.
nice.
Yeah.
Yeah, how did you trade this week?
Um, not suboptimal, but still profitable.
There you go. That's good.
Yeah.
Yeah, this week was a little tricky for me. I was trying to size up some trades, but yeah, it's like for instance, like I was watching MU because MU was really strong the previous day, just ripped up at the open here. This is Thursday, just opens up here below the J lines and just goes vertical. So I was like, okay, that thing was pretty strong today, and it did this trend line break here in pre-market. So I was like, okay, let's see what happens. I plotted my lines and caught an under over here, got a nice little pop, and then I tried to add to it here, and it just didn't make it back up, and just flushed, and then went back up. This 9250 was not letting it go, above for very long, 9275, and then it dropped down to the bottom of this range, and then I took a trade here. I was like, I was trying to trade the breakout here. I was trying to trade it here for the curl up and go towards this 9335, but I just couldn't get it, and I tried a little too much here, and then once I took a trade here, I just nailed the thing, and the thing went.
Stuff. You traded the bottom of the opening range. I was more so waiting for a 5 minute turn, which happened, but like you said, I mean, there was like some wick candles on the range high, so I'm like, okay, this is probably not gonna go. I just trailed to break even, got out, and then I stopped watching it, and then the setup actually happened.
Yeah,
And
that's how it goes.
yeah, that's how it goes. I mean, I'm good if I just even capture just even one, even one home run. It's good.
Yeah. It's
So
I feel like on some of the big caps, they've just been a little tricky with how it's been like curling up, either below J lines. In this case, I got like a 250 moving average here, which is kind of like the 3 minute J lines. But yeah, I don't know. It's been a little tricky. I mean, if you were using the 5 minute and the J lines, I mean, it was holding it. You could see very clearly here. So I mean, that was the better signal than trying to use 1 minute J lines. I mean, kind of held up here,
hmm
but like I've been noticing this week, the past couple weeks, we've been getting these like curls that are like either below pre-market low or below J lines, and then it goes. So it's
on
been,
common on pullback market.
yeah,
Morning dip, for about like less than half an hour, and then yeah, and then range in reverse.
hmm yeah. How's everybody else doing? Christina, I saw you were killing it. Good job, as always. Um, Leo, hope the ES trading was good this week.
Yep, it was good. I had a good Wednesday. And Thursday was kind of a break even, $56. And then let's see, Friday just around $500. I didn't trade. I traded the pre-market mostly because I had some things I had to take care of with family.
Yeah.
But it was still a green day, so I only traded 3 days. Monday and Tuesday were pretty brutal as far as swings and choppiness and intraday. I
hmm
just I did a sim trade on Monday, and but Tuesday I didn't trade. So 3 days, three green.
That
So
works.
hanging
Good.
in
Good.
there.
Yeah. Looks like we're going to potentially make the leg down now on the ES.
Oh yeah, it's looking like it.
This is what I was expecting was
I think we.
exactly what it did. I was expecting it here. So like we had this major sell off, right? And then it pulls back up to the J lines, and I was like, okay, here comes the rejection.
I think
And
we
then
talked
on
about that last week on Saturday. We thought that might happen.
Yeah, and it on this day it did that like green day that turned into a red day,
Yep.
and I was like, okay, here's the signal, and then it kind of got held up here at this 4450 area,
Yep.
and then now it's made the double top, and then it bounced exactly off of VPOC, which is right here. Let's see. So if you back out and use this data of when we were trading in this range here, the volume point of control is this like 390 to 380, you could say. So
Yep.
roughly there, and I mean
Well,
it
just
just
previous
bounced right off of
value
it.
volume areas. Yeah. I think I mentioned that in the room at some point during
So
the week.
yeah, I think if we don't hold up here, this 4390, then we're gonna go and test this 42, 4300 area.
I want to go back to 4,000.
When we were going over it here, we were talking
Yeah.
about
Getting
how it could
close.
get down to 4,000 to 3,900 was the real value zone. There
Yeah.
actually wasn't a lot of value at 4,000. See here,
Right.
here's
No.
4,000. I mean,
Right.
it just breezed right through here. It was
That's a
here that held it up.
low volume area, and then that's a
So
high volume node right there.
yeah, we got a pretty good shelf here. So I think that if we do lose 4,200, we'll go back down to 3,900, which is just going to be brutal on people's portfolios. And but whatever. I mean, I'll just buy more
Yeah.
down
I
here.
mean, this whole crap that we're going through politically is going to end one day, and the Fed's got to try to stay in business.
Yeah,
Otherwise we're all going to be hurting pretty bad, except for people who know how to trade this stuff.
yeah, exactly. That's why we're all learning how to do it, right?
Exactly.
And I think like what was it yesterday? They were saying, oh, the market was going down because of the Russian Ukraine news, and I'm like thinking to myself, like, that's not really. I
No,
don't
it's
think
already
that was,
news.
huh?
It's already news.
Yeah, it's been, and then it's like I don't think that everyone decided to sell on Friday because of that news. The media like just chooses the most common topic, and they're like, "This is why the market went down," and you're like, "No, the market makers decided to move this thing down." And it was a kind of a technical setup right here at this 4,500 rejection.
Isn't
Well,
it because of
4550.
inflation though, right? Like,
Yeah, and the inflation data came out, right?
the CPI number was brutal.
Mm-hmm.
I traded right up before it, and then I got out. And one of my part of my trading plan is not to chase, no matter how big a move is. Just I've been whipsawed so many times in the past that I just don't chase so much. I just wait for the
Yeah.
market to calm down, then find an area to go with the trend.
That's actually, hey, morning guys, OTC here.
Yo,
Hey,
Luis,
good
how are
morning.
you?
That's actually a topic I'd like to talk about today. What someone just said, sorry, I don't know who said that about chasing certain
Leo.
things at certain times. Yeah.
Yeah, we can discuss it. I think
That's great. I'd love to hear it.
we've
Yeah.
all had our
yeah,
experience of chasing, right?
If you get a chance before the session starts, just go to Twitter and look up, probably you're familiar with him, look up Scott Switterman.
Oh, on Twitter.
Yeah.
Okay, here, let's see. I don't use Twitter on my computer, but we can try.
I got TweetDeck here. Let's see.
What was his name? Scott Travis.
Just go to Twitter and then search at Switterman.
Okay, let's just search it.
Dot,
So-
dot
so-
N.
You guys don't use Twitter to help your trading?
Only on my phone.
Okay,
Scott.
gotcha.
No, I actually don't use Twitter at all. I don't have a Twitter account. I really don't like them as a company, actually.
What was? How do you spell it?
Who
Scott
who said that?
Trader John.
John, you're large cap.
I am a large cap trader, yes.
Okay, but you're an experienced trader. Yeah. Right? You used to trade. Didn't you tell me once that
hmm
you've been trading for several years? You traded futures and whatnot?
Yeah, I've
Okay,
been
yeah.
I've been in
Yeah,
this game
so-
for a while for sure.
Yeah, so you've refined your system. So I wouldn't I guess for lack of a better term, pressure you on that, but um, I see a lot of value in Twitter because you can scan. I mean, I'm in the small cap world most often, right? So I'm scanning for pumpers, right? As soon as, let's just say, for example, ORPH is running, I'll go into Twitter and I'll put in ORPH in the search feature, and I'll find who's pumping, and I'm looking for certain names, Ultra, the real ones, certain Discord names that I know are pumpers, right? And I'm trying to see if they're moved. Like for instance, ORPH on Friday was a name a show pump, right? IU pump. And he's teamed up with several guys. I won't name names, but they pump the stock together. Cool, right? And so that helps in the small cap world because when they're pumping it, now I know the extension is going to fail because those guys are just they're pumping it to get their long and then they're going to dump it. It's
How
going
do
to
you
come
spell
right
his
back
last
down.
name?
I just someone just
Posted on the chat.
go to the
Oh.
chat. Yeah, it's
Sure.
Switter. It's just Switterman.
Switterman.
Yeah. So this guy's been trading. Scott has been trading since the early '90s, and he trades purely on patterns and trend lines. He's one of the few guys that says that tape is useless. Tape in level 2 is useless. He just trades the chart and he uses trend lines and patterns. So if you go down and look for, he has a post that's based on Kelly Criterion. Keep going down. Keep going down. Keep going down.
That's nice. He posts up a lot of reviews.
Oh yeah, this you would like this, Eric.
Yeah.
He's got very good charts and very good
Cool.
annotations. He's a
Mhm.
really good follow. Keep going
Stretch
down,
it.
and he's a super like this one here, the one below. And he's an extremely nice guy. Like he will respond to all your questions. And he's not one to hide his edge, right? He shares everything.
Yeah.
Yeah, that one there. So basically the concept behind that, if you just click on the picture, is what he's saying. And I've done the same kind of study using Kelly Criterion. So he's using Kelly Criterion opposite of the way I use it. He's using it to give him an expectation of the move based on risk, reward, and win rate. I use Kelly Criterion to gauge the size of my trade
Oh.
Based on volatility and a Kelly Criterion example of so Kelly Criterion is I won't go into too much detail, but because I love to do that, right? Kelly Criterion is a bell curve like this, and at the 50%, you're basically maximizing if volatility is here and size is here, and this is volatility, right? So as the volatility, and they're not crossing in the right place, it should be like crossing like right here, but in the right moment, that 50% gives you the safest volatility with the best risk reward, right? Because this is your probability of success curve. And so with a 50% Kelly Criterion, you're at a max, but there's also an extreme, right? If you go to 100%, or if you go over 100% on your size, your volatility obviously is increasing, so your chances of a loss here are higher. So my point being is, if you just read his comments, he talks about how there is a time and a place to overload your size, right? There's a time and a place when the market slaps you in the face and gives you a signal. There is a time and a place to go big. So for instance, on the Affirm, where they announced in the middle of the day, someone fucked up and announced too early, right? And Affirm just started crashing. And we can review that trade later. Well, I saw an opportunity. I found a play, and I DM'd it to you, Eric. I found a play, and I decided, you know what? This was a mess up. Someone posted earnings before they should have, because these should have gone in after hours. I found this play with my trading group. It's identical. Halt, 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 bounce, right? Bounce. And so I was up, I don't know, I think I was up like 8 or 9 R on the day. Well, I risked that entire 9R on this trade because I'm playing with house money and the opportunity was there, right? I risked that entire 9R and I finished close to 20R that day.
That's
So
awesome.
the point is there's certain days and certain times where chasing is not a bad thing. Like for instance, yesterday when the market started selling off, um, I just slammed size on the bid into AMC, right, and wrote it down for a 1 point win. And again, it was an opportunity where I risked my entire day and just said, you know what, I'm playing with house money. I'm up. I think I was up like 6R. And again, I almost tripled my day, but it's because that opportunity that's very rare in the market presented itself, right? The SPY was just being destroyed by
Yeah.
that war news, and there was really nothing that was going to hold up, right? Everything was going to go with it. I missed the puts on the SPY. I was late, so instead of trying to get puts on the SPY last minute and chase it, I just got into a stock name and wrote it down.
Hmm. So going back to this, so he's talking about how when the trade's actually working, you should be adding size into it, or is that, do I understand that correctly, or just when you have conviction in the setup and you're like, all right, this is it,
No, when the
that's when you're supposed to
if you
risk it
review
all.
his charts, he puts on a feeler, he puts out limit orders on several stocks. But yeah, to answer your question, yes, he says add into a winner. Once your play is confirmed and it's going in your direction, add to a winner. And let's just say on the short side, right? I get in here and I am adding to a winner here. My original stop, let's say this thing spiked like that. My original stop on this entry was here. As soon as he adds to a winner, he's bringing his, it's like a trailing stop, right? He's
Yeah.
bringing his risk in. If he keeps adding, he's bringing his risk in. Obviously, he's going to make his ads um, in a manner that it's still beneficial to his risk reward, and he's not. And at that point, he's not really worried about it getting stopped out, because if he gets stopped out, that means the trade is not working the way he thought it was. So he's making a decision at that point. Okay, well then I have my risk now. I get out, and it goes higher. Okay, well now I look for the next trade, the next opportunity to get in, set my risk again, add to my winner, add to my winner, add to my winner. This time it works, and it retraces even further than the previous kind of thing.
Yeah, I've been kind of looking up how certain traders add to their winning trades, and what's so amazing with it is that you can start with something like $100 risk and then start building these positions. And I mean, you can have trades that are making thousands of dollars based off that, initial $100 risk, let's say, or obviously more than that. But um, there's so many traders that are big size traders, whether it's the short bear, um, even like Ross Cameron, Andrew from Bearable Traders, and there's more of them, and they build positions
Correct.
instead of just one entry, one exit. And I think that there's so much more kind of forgiveness in that, because sometimes we get into trades and then instantly it's not working. And if you sized it wrong, I mean, you're eating into your you know max loss for the day, or how much you can lose. But if you take it on a quarter size or a certain size and then you're adding to it, there's so much more for that. But I was looking up techniques on how they build their positions, and it depends sometimes. When From what I've seen, it depends on the person's kind of like personality. Like, I've seen starters like this, or starter here, add here, and then it starts working. And when it's working, they bring, like, let's say we did, just keep it simple here, 50 shares here, 50 shares here. Now we're at 100 shares, right? And then it starts going up. let's say when this next breakout is happening, they don't add another 100 shares to be up to 200.
No,
They
they
add,
had 1,000.
oh, here, yeah,
Yeah.
like what I've seen is what they do is they add like 80 or 70, and they keep their average cost below the 1 minute bar, so that way they're always in the money if the thing is going up, you know. So yeah, I mean that. So you're saying that they add huge size once it really starts working.
Right, because now you have a risk of either here or here, right? If you add big here on this breakout, then you have a risk of here. They're tightening the risk. The original risk was here,
Hmm.
right? So this, for instance, here, right? I had this was 100 shares. That's my feeler order, right?
Hmm.
I was early, I mentioned in the notes, but then I saw this massive volume buyer value area coming in, and here I added 1,500 shares. Okay. And now my average that was 56 something, my average
Yeah,
came
it's-
down to, yeah, it came down exactly to there, 53, it was 53.50-ish roughly,
Hmm.
right? Um, and I believe these were premature because this was not, I'm not a longer, and I'm not a typically a large cap trader. And so being, mainly it's because I'm uncomfortable on the long side. So I immediately took off size, right?
Yeah, but you got a couple of dollars out of it, so I mean that's really good.
No, I got them off.
Off
It
the
was
first
less than
partial.
$1, yeah. But that's okay, because the thing is that it's, being scared is not a good thing in trading. Being uncomfortable is a good thing in trading, because the only way you can move to the next level of your trading in terms of size and risk is to break through that uncomfortable zone, right? So scared is bad. If you're scared, reduce your size. It means you're not ready. If you're uncomfortable, learn to accept that and work through it.
I'd say this is
So I
what
was
I do.
scared. I was scared here. So
Mhm.
I took off size, and once I took that size off, I was just uncomfortable.
Mhm.
So these got smaller. These were smaller, taking off, right? But that's based on just not being comfortable longing, because I'm a short bias trader. But the opportunity was there.
So you're thinking the better technique for instance, how this guy's doing it is put in that feeler. It starts setting up a little bit, and then he adds massive size right after that, instead of adding, let's say with 100 shares, adding 50% of the size. So now you're at 150, and then now you're at 200, and then piecemealing in, kind of.
Well, it really depends on the confirmation signal you get, right? So I was looking for this bounce, which it was doing. This is, and it did a hard bounce, and I saw them come into 50 on the order flow, and then I saw the bids start piling in, and then this thing went up and then pulled back, and when it pulled back and then reignited, it came. I mean, the ask was going crazy. The tape was speeding up. The ask was going crazy, so that's why
Yeah.
I went heavy. But
Yeah.
you also, in this trade, I also had to consider the fact that I do not want my average up here, right? So my size on this entry had to be such that it would bring my risk very tight. Because at this point, once I was in here, my risk was here.
Yeah. That's, I mean, once you were loaded in 1,500 shares, I mean, you couldn't have let it go all the way back down to 50, because that would have hurt.
Yeah.
Hmm.
So it's really, your question is hard to answer
But haven't you
specifically,
seen how-
because it's independent. It depends on your signal.
Okay.
Like if this would have been, okay, this is a good buy up, maybe I have 100 here, maybe I add another 500 here. That still brings my average down, but my total size, I want it to be, 1,500. So then once I see this new high develop, then I add there, but now I have to bring my stop loss here because I loaded the boat on this entry,
Hmm.
right? So it really just depends on how you dissect or how you develop your
Yeah, I've
your
been working on
thesis
it
in that moment.
because this, in my mind, is like one of the better ways to trade because there's so much uncertainty when you're taking a setup. Let's say, for instance, on big caps lately, you'll get this really nice wedge that looks like it's going to break higher, and then right before it actually breaks higher, they do a shakeout where it makes a whole new low. It goes through the previous relative low, and then it goes back up. So,
That happened here.
mm-hmm,
That's why I was early, right?
mm-hmm, yeah, it looked like
Because
it was
this
going to.
thing started pushing up. It looked like it was basing, and then bloom, they dump it again.
Yeah, and they try to shake out every weekend. But you do know what I'm saying, though. I'm sure you've seen many traders that they add size and then they keep their average cost like below the candle that's currently in, and so that way, if it goes up for 3 to 5 minutes, I mean, and they're adding and adding and adding, then by the time they get to here, um, let's say they started with $100 risk here, and now they're up to here with adding. I mean, this might be a 10R.
Yeah, yeah. I mean, I'm not comfortable on the long side to just keep adding up. I don't.
Mm-hmm. But same thing, kind of vice versa. Let's say you get like this trend break here, like this. And let me do the annotate because I've been thinking about it quite a bit. Like, let's say you get this trend break here. You start with a short here, and let's say this is a good setup hypothetically. So you start with a short right here, and then you start adding like maybe 50% of the size, 50% more, and then this does a pullback. Your average cost is still kind of right around here, and then you add more and more, and then you add more as it's going down, and you bring your average cost down. And by the time you get to here and you're taking a partial, I mean, you can really accumulate into a position. That's what I think the short pair calls it, pyramiding a position is
Mm-hmm.
what I've heard him say. I don't know if that's coined or not, but um, he starts with those positions, and he's trading with multi-million-dollar accounts, so you have to do that, right? But yeah, so I've been looking into it and kind of researching it because I think that that's a really great way to um, make more money, but keep the losers and the losing days smaller. Because even on like the Short Bear's recent post, he was like talking about how in the market you don't know anything. Like, yeah, your setups, things like that, but which direction will it go and what's going to change? We don't really know, and it's just all like risk management and being able to put on the risk uh, to trade really big size. That's the key. But yeah, I've been looking into that quite a bit lately, and I have been testing. I've tested it before, but I think it's a great technique for making a lot more money on the winners. And what's cool is you can turn losers into winners, and there's a technique in that as well. I would say where you put it on a feeler, it's not working, and let's say it's really not working, you might be able to, let's say this thing was going to keep going down. Sometimes you buy the breakout, you add big size on like the breakout or as it's going through the breakout, and then you add the big size here, and then you can get out at break even up here. So there's a technique in that too, I would say, if you really felt the trade wasn't working.
I got a question. The Shark Bear, is that the same guy that used to trade a lot of index options and futures? I used to follow him, but then there was a point in time where I think he just kind of fell off on his tweets. See,
I don't think so. I think he's primarily a small cap trader, right?
okay,
OTC.
okay. I might be confusing him with
He's
somebody
like
else.
some 24-year-old
Yeah,
kid.
Lucas is a he came out of Matt Az's room. Really bright guy. Yeah, he's a young guy, 20
Okay,
25 years old, and hasn't been trading that long. He's been trading, I believe, since like 2010, 2012. But
yeah, okay,
he's a small cap short bias trader.
all right. That's just all right.
I
My
think there's a
mistake.
few short bears.
Yeah,
But
all
yeah,
right.
that's a really cool topic. Like, I wish that there was more technique that could be explained for building positions like that. Because the other thing that I was looking up with some of these guys is they take the feeler here, and then when this thing pulls back, and now it makes this previous relative kind of low, they add here. They don't add as it's going up here. They go for the next leg up, and they add big size here. They bring their average costs up here, and they're trading based on the pivots. So that's
So
kind of
here's a way of thinking about that, right? So Luke and Lucas, the short bear says it. So most people, most traders, including myself, we're often I'm a person that if I don't catch the top tick, or at least very close to the top with some size, I pretty much avoid the trade because it's just become my visual style, right? I can't explain it. If I don't catch somewhere, some size near the top tick, I have a very hard time getting in the trade at all, even if it gives pops, even if it gives very good pops. But here's what Lucas says about that. And you have to think about like these guys, like short POS is also a massive size trader, um, and the short bear. They're not concerned with where they're going to put their size on in terms of, oh, I need to catch the top. Because obviously, if a guy like that who's trading 50,000 or 100,000 shares, if he gets in on the front side and that keeps moving, it's going to squeeze him because he can't get 100,000 shares off in one click. He's got to piece it out, right?
yeah.
So their concern is, how do I identify the backside? Not where is the backside or how did I find it, but how do I identify? That's their edge. How do I identify where a consistent backside is? And so I'm not going to give away short to POS is edge, but he uses a higher time frame and he uses an expansion selling candle where he sees that the longs are trapped, and then he waits for a certain percentage pullback after that higher time frame candle has set in, waits for a certain percentage pullback off of the bottom of that candle, and then he gets in, and then he's risking the top of that candle, but he's not getting in at the bottom. He's waiting for a certain percentage pullback on it, right?
Okay.
So my point
When,
there, my point
yeah.
there is these guys that trade huge, their edge is, have I established where the backside is? And if so, now I can load the boat with 50, 100, 200,000 shares, because if I get squeezed on that, there's plenty of liquidity above me for me to get out. Make sense?
Yeah, yeah, that's really cool. You'll have to show us an example when you come across something like that because, yeah, I mean, I've thought about all that before on how when you're trading with such large size, you have to kind of adapt your style, right? You know, it's not just the same trading
Yeah.
from small
Yeah.
size.
I mean,
So,
ORPH is a perfect example. There's the chart. So once again, right? So the way they're doing it is this, whatever higher time frame he sees in here, or let's just say it's that candle there. Whatever higher time frame developed that, now he's waiting for a certain, from wherever that trade signal is for him, whether it's here, and I don't know, right? Maybe the trade signal's there, maybe the trade signal's here. But now he's gotten that expanding volume downward candle on a higher time frame with big volume, right? And so now that would be this line here. Oh, that would be this line. Let's just say hypothetically that's this line here, right? So that line becomes his trade signal on a higher time frame, and then looking for a certain amount pullback from there up for his entry, right? Which would be here. And then now, like you said, he's got to put on, 50,000, 100,000 shares. So obviously he's going to be putting on obviously this here is going to be multiple circles, right? And then he might
Yeah.
add on the way down a little. And his risk, and the risk now becomes the top of this candle, right? On the higher time frame, which is either here or up here, risking the high a day.
Okay.
And now he knows out of, 20 years of experience that this is a very high probability setup because there are so many trapped longs in this area, right? And now this move can go down and fade off because it's a small cap piece of shit, right? So it's going to fade off. But if he, but if we get squeezed here, right? If this thing starts going up, the risk as I defined is this line here, and there is significant amount of liquidity in this area to get out, right? Start piecing out.
Okay, that's where they start trimming trimming the position off.
Yeah.
If it starts to go up, because they don't get out like you're saying in one click. They trim, right?
No, you can't. If you're trading that much size, you can't get out in one trade. It's impossible to get off. I mean, this is a $2 stock.
Yeah.
You can't get out 50,000 or 100 shares in one click. There's no way. You'll make the price skyrocket. I mean, that price, if you get out 100,000 shares in one click, that price will go from 225 to 325 in a heartbeat.
Mm-hmm.
It'll just go parabolic.
But DC, have you ever gotten out of a position with like 10,000 shares on a $2 stock
Yeah, that usually I can do that in 2 clicks.
in 2 clicks? Okay.
Yeah, even 1 click if the liquidity is pretty high. Because you got to remember the tape on these very low price tickers is usually you've got lots of
Yeah.
100, 150 on the level 2. Yeah, it's got to be liquid. I mean, if this thing's running on 200,000 shares being traded, then I'm not going to trade that much. I'm going to trade
Sure.
4, 5, 8,000 shares max.
So they start building a position here. Maybe they start shorting here on the downside. They add to it all here, but then they keep their risk up here.
No, we don't. We don't put anything on here. If you're trading that kind of size, you're waiting for that backside trade signal, right? Maybe it's this because of this bottom here.
Okay.
And then waiting for a particular retracement, right? A particular percent retracement up. And so the entry area, because entry is never a line, it's an area. The entry area is here. And this pop is a gift from the gods, right? Because you started your position here, boom, 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 and then you're getting an opportunity to put on size even higher, right? And then now we're safe.
Yeah.
Now we've got this move, not going to take anything off, maybe add a little more here and here, and then it's going to come up here, but the risk is up here or up here, right? And have an opportunity to add more here, and now you get the dive.
Mm-hmm.
And now, like you said, you've got so much size on that this, whatever, 36 or let's say 42 average, you got almost 35, 40 cents out of it. But you have to think that that's with a boatload of size.
Mm-hmm.
It's not a very big range, but if you have the right amount of size and you have the conviction that this trade works every time, then this is a really good take profit.
Mm-hmm. And do you think that, let's say you wanted to, trade small size, you want to risk, maximum amount here was that you're willing to risk was $500 loss if this thing squeezes back up. Okay. Do you think that practicing those techniques, kind of like you're explaining here, building positions here and throughout here, but keeping your max loss size would be 500 bucks. Do you think that that's still good technique and good practice?
As long as your size is relative to your risk, yes. I mean, obviously this here, this move, risk reward from there, and let's say your average is right here on the VWAP, your risk reward from there, that's like a 2 to 1. So that's the whole point is, okay, so the entry in this area, or in this area actually was small, right? Was smaller here. But once it comes back and does it here, and you're adding a boatload of size, now you can't have this risk. You can't have this risk anymore. That's just too big. It's not worth the risk reward.
Hmm.
So now the risk has to become maybe here or here, right? This top. And now if your average is, if your average is somewhere like that, now look at your risk
Yeah.
reward. Right?
Yeah, now you got a 3 to 1, almost 4 to 1. Yeah, that's really nice.
Yeah. Now your risk is here. Your entry is here, right? And that's your risk reward. So that's 1, 2, 3, 4, maybe 4.5, 5.
Yeah. And if you're risking 500
5 to 1.
bucks, that's a nice 2 grand day.
But I had a question on that too. When you do that kind of sizing, right, and you lower your risk as you size up, right? Let's say you got in here, and then it broke down. You got in here, and you got in here. As it's trading in that kind of channel, and you're starting to notice where the bottom and the top is. What I usually would do is like I would take some partials right around here, maybe add here because the channel went below. The extension of the channel. The channel got smaller, so I took another partial here, maybe another partial here, and then right here I took another partial short, right? So even if my sizing goes up, I'm still taking partial. So when you talked about how you would lower your risk, if you have that kind of money, that extra money that you made, would you say that your risk is still pretty high up regardless, even if your risk is tight?
No, so you're defining two different things. You're defining a scalper versus a short position, right? A position trader. So this is a position trader, what I've been talking about. And you're kind of going into the world of maybe more of a hybrid, right?
Yeah.
More of a hybrid style. So these ads here, if you're playing a position trade, these ads here are tiny relative to your size here, because you do not want to bring your average down that much. And you definitely don't want to bring your average below VWAP. Okay.
This is what I'd always do on big caps is I bring my ad here when I'm like looking for the leg down is too big, and then I bring my average cost too close, and then I get shaken right here and then miss the a move down.
Yeah, I believe
So I'm guilty of that too.
It's like Kyle DC that he trades like that, I think.
That's how Kyle trades. Yeah, Kyle
holds
trades.
the core and keeps the ads like small to keep his average like high enough.
Yeah, exactly. And the way to practice, so I'm bad about that as well, right? Adding here. So what I've done is let's just say I'm planning on trading this with 5,000 shares max. Okay, I have a hotkey now that I have a 25 share and a 50 share hotkey.
Oh, really?
Yeah, and
so small compared
exactly,
to 5,000?
exactly. What I'm doing here to educate my mind is I'm feeding the monkey.
Okay, cool.
Okay, so I'll put 50 shares on here and 50 shares on here, just because I'm still not good about waiting for the extension, right? And so I'm feeding the monkey, and every day that I do that, I go back and I review, and I said, okay, today I fed the monkey 5 times. Yesterday I fed the monkey 10 times. Tomorrow I hope to feed the monkey only 3 times, right? So you can't, in my mind, I always use this analogy, and I've never been a smoker. But you can't go from smoking 2 packs of cigarettes a day to cold turkey, right? You're an addict. Well, trading is an addictive sport. You have to go from weaning yourself off. So that's what I'm doing with these. I'm weaning myself off with my 100 button. With
This
my
is like
buttons.
1% of your, you know, max size, like 1% at like 1% of your max risk.
Yeah. So
That's so small.
So the practice is okay. Well, I have this problem where I feed the monkey. I'm gonna feed the monkey here like that, and then when it comes up here, I'm gonna hit this guy, right?
When it comes back up here.
Right.
But so like let's say you're looking for this breakdown here, you're adding your initial starters at VWAP or up here, let's say, and your risk is here. What is the starter size? Would you say if max is 5,000, do you start with 1,000 shares here and then you're doing 50s ads, or maybe 1,500 to 2,000 here?
If my trade has already confirmed that it's gonna die because it has, look at these peaks, right?
Mhm.
See this peak, see this peak?
Yeah.
We're already below pre-market. I mean, the previous highs. This was your pre-market high here, which happened at the open. So this is your high a day. So your original high a day, let me delete all that. So the original high a day is here, which I've marked, right? That's the previous day. That's for, oh, no, sorry. That is, yeah, that's, that happened in the previous day.
Yeah, previous high day. Okay.
Yeah, okay. So I know that this move here is inorganic. This was a pumper move, right? This is typically not going to happen more than once in a day in this market cycle. If you go back a year, yeah, definitely this would have done this, cleared out here, shelf, maybe gone higher or come down, depending on the tape, right? But in this market, I know by stats that this move is an outlier move, okay? So to answer your question, now that my trade is confirmed that I've got that expansion candle, and I've got this high, I've got this high here, I've got this high here, and it's definitely below this high. When it comes up here, I'm putting on at least a quarter, if not half of my size already.
Maybe 2,500, let's say.
Yeah,
Okay.
25% to 50% there.
Okay.
And then because I'm not versed very good at not feeding the monkey, like I said, I'm gonna add a little tiny bit here, a little tiny bit here. And then when it comes back up here, I'm gonna add maybe another 25%. And then as soon as this confirms the breakdown, this is where I start loading up,
Okay.
right?
And you might even exceed 5,000 shares, right?
Right. If the trade is, yeah, like yesterday, this thing failed with the SPY, right? Everything failed with the Putin news.
Mm-hmm.
So yeah, this was a massive overload here.
That's awesome. Yeah, this is what I've been.
And I didn't trade
Slowly
this one. I
researching.
traded Cavill. I traded KAVL. But it was very similar. That one just broke out a little more and then did that and then did it. Right? Same situation. They all do the same thing in the small cap world.
Yeah. I think with small caps at times it's a little bit easier if you're using those techniques. Not quite the one entry, one exit, target. That's a little bit more difficult. But with big caps, it's hard to determine how long it will run if you are going long. And if it does break down, obviously you can ride the trend, but big caps can be tricky when you're adding and building positions. Obviously you got to use value zones and relative levels, but that's what's so nice about small caps, especially when they're working. I know that there's been a lot of days recently that small caps have been tricky, but when they are working, building positions like this, I think it's so good because there's a lot more forgiveness if you don't over add. Any questions on this, you guys?
Sure.
I still think, I don't know what your opinion is on this, is like going like the hybrid route gives you maybe the safest option. Because if I were like to do what you did, right, and let's say for me, put a, I would have put like 50% here too, and when I see this trend break, maybe I'll add like 10% of my shares, and then probably cover some here, and then I would look for probably the bottom of that, for it to go. But when I see like it holds here and holds here, maybe I'll cover a little bit more. But then when I see this top, put like 10% in, and then cover here because I already see the support here, and put another 10% in and cover here. And so once it does this kind of move, maybe I'll get out all of my position here and then add another 50% because I'm expecting this kind of topping, right? And then when I see this trend break right here, I'll add a little bit more to like 25% of what this position is, right? And then I would cover here because this is the bottom right there. And then
Yeah.
I would short again here because it tops, it goes back to the bottom of that channel right there. And then cover here because it already made support here. Like, would you say like, yeah, like the ECN commissions are expensive though.
Yeah. It's just I mean, what you're defining is an excellent way to trade. Many people do it. There's absolutely nothing wrong with it. I'm just all I'm saying is that you're on a different mindset than what I'm trying to evolve to, right?
Mm,
You're scalping ranges, which is excellent, and you can make a good living doing that. But my goal is to have I want to have those trades where I have red candles, red candles, red candles,
right.
right? And I want to have um, maybe a green candle or a cluster of green candles here, and then all out here, right? And that's a position trade. It requires a lot of patience, and so in order to go from where you're talking about to where I'm talking about, the way I practice is literally with a 25 shares, right?
Yeah,
I
that's what I
I will start
kind of
this
do too.
trade. I will put on 25 shares up here. I will be extremely patient and I won't take anything off here. I'll put another 25 on up here, right? And then maybe I'll put on, once I see this confirm, I'll put another 25 on up here. And then once I see this confirm, I'll put on 100 shares, right? So
No.
that's to me, that's we're all at different stages in our game. So I'm not saying this to downplay anybody's trading. You have to trade at your own pace and
Yeah.
and size. But for me, this is I can't I can't I'm not gonna stay too engaged with this, right? This does not get
Yeah.
my heart pumping.
Hmm.
And this does not pay me what I want it to pay me, but this has nothing to do with getting paid what I'm defining right now. This has to do with training my brain to only get in these places and doing it with such a small size that I'm not focusing on this trade too much. I set this trade off to the side and I'm trading other things to make my money, but I'm doing this as an exercise and then getting all out down here. I'm just trying to train my brain to be patient across this time period because that's the entire day,
Yeah, that's
right?
cool. Yeah, I've been
So it's just
actually.
an exercise.
That's a great way to put it, OTC, because like Mark's saying, that's primarily how I trade. I'm scalping so much. I'm zoomed in on a 1 minute chart where there's so much happening in the big picture, and I'm often missing the big picture because there's greater moves, and I'm just worried about a few points when I'm scalping, right? And that's a great way to do it with a small size and just practice and training.
For me,
Rather than call it last comment, rather than call it small size, call it insignificant size, because small size to me is very different than small size to another trader, right? And vice versa. There's traders whose my size is minuscule to their size. So just trade it with size that you don't care, insignificant, where you're not paying attention to the chart all day and wasting all your mental capital on something that's going to, pay you, $50 or whatever it is.
Mhm.
for me, I think the reason why I do it the way I do right now is that I'm just not as adept at reading level two like you might be. So, but I can read price action fairly well. So maybe I think I personally I take the scalps as a confirmation uh, to my bias, and just in case I mess up and the level two goes a lot higher than I thought it'd be, and I get caught in the front side. If I'm small sized, um, I can get out for the smallest amount of risk. But at the same time, if I'm right and it starts trading in a channel, which is a lot harder to trade, um, then I feel like I have that kind of safety net, having that extra profits in my hand if, in case I do go wrong. It does go wrong, you know.
Yeah, for
Yeah.
sure, for sure. All I'm explaining in that tiny insignificant size is just something that you can, an exercise that you can do if, the keyword if, you want to evolve from a scalper to a position trader. Because at the end of the day, when you see small cap, if you go back and compare this, if you go back and compare this chart to other small cap charts, I mean, how often do you see this pattern, right?
Hmm.
Yeah,
Over and over and over again, especially in the market cycle we're in now, right? These pops are inorganic. This pop is inorganic. This pop is inorganic, right? You
Yeah.
just, it's just an exercise.
Yeah. I was
also
going
for the
over.
yeah,
Go ahead,
and
Mark.
also for the ECN fees too. Like if I just add liquidity to the market, and it's partial size anyways. For me, I don't feel as bad if I don't get the entry at all because it was small size anyways. So I feel that's like one of the things that I can do to avoid the extra fees.
Yeah, and we don't think, I mean, on, we think about ECN and commissions at the end of the day. When we're a newer trader, we think about those things at the end of the day. But as you evolve and grow your size, that percentage, ECNs and commissions to your P&L, becomes very significant, right? Like there's some of these big traders who are paying, $20,000 in a day just on locates.
Yeah,
So how, when, and then now you're having the issues of liquidity, right? And so you start getting very fine tuned into, okay, how can I reduce the issues of liquidity? How can I reduce the issues of ECNs and commission? Okay, I have to evolve my trading into a position trade more than a scalp mentality. It's just part of the evolution of growth. I mean, you hear people talk about all the time how if we trade less than 10,000 shares on a small cap, we've
mm,
we've got it easy because we don't have to worry about liquidity, and we don't really have to worry about ECN and commissions, right? There becomes a point in your size where you realize, oh shit, I have to test the stock, like put out a 10,000 share stock out, or order out here, just to test what it will do, how it will affect price action. And then based on that test, these guys who trade 50, 100,000 shares, that's how they evolve into trading this with 100,000 shares. Because if this 10,000 share order causes the stock to move too much, or in a way that's not what they're trying to see, then they know that this size is impossible, right? There's no liquidity. So you have to test the stock to see how it accepts your liquidity. And a great example for you guys who are on Twitter is the way that Madaz has been talking lately, right? He's constantly complaining about how illiquid the stock is and how the moves are funky and how there's fake liquidity. That's
yeah,
because he trades so much size that he sees these erratic moves, that when he puts on 20,000 shares, it affects the market in a way that he doesn't want it to.
Yeah, that's what happened on MU on Friday yesterday. Some like fake liquidity, I felt like. And then also OTC, kind of on that this whole subject. One way I've been kind of tracking it for big caps. I was working with Top Tick and Amar a little bit. Is there's like some of these stocks, especially when we're in a bull market, they have a really high probability of going to pre-market high in the first hour. Like for instance, Apple. I haven't tracked it over this past week, but Apple had an 86% chance that in the first hour of trading, it would touch pre-market high. So if you know that and you're trading big caps long, um, you can kind of build those positions as that being one of the targets. And I've been tracking it. Some stocks like AMD that have been kind of trending down, they were lower. They were like 50 to 60% chance of touching pre-market high in the first hour. But I've been kind of tracking that because it goes back to these building positions where, let's say on Apple, you just want to take 50 shares or something small, nothing significant, and
The ES has the same stat. It's almost a 90%.
yeah, and you can use that stat. That's cool. You can use that stat as how often is it reaching pre-market high, and that can give me one a target for the big caps, which is important because sometimes you're limited on targets, and two, it can give you kind of conviction to hold a trade better. You know, if I know that Tesla's got a high probability of reaching pre-market high in the first hour, if I'm trading near pre-market low or near the J lines or VWAP, I can maybe accumulate a position and have pre-market high at least as one target. If we break pre-market high and set up to start trending, then you can really have a huge winner because that's what you're looking for on big caps is to go long. Typically, do we get through pre-market high? Yes or no? Do we stay above pre-market high and begin trending? Because that's usually where we get into a trending territory. So yeah, that's kind of something I've been doing for big caps. But great discussion on this. Does anyone have some questions about this or any thoughts about kind of building positions?
Regarding, scaling in, so I actually used to scale in counter trend big caps. Um, so I mean, I'm not good at this style because like my personality would just be like, this is the one, and I just like add in full clip, and then it keeps on going, right? But I was part of a room before where they literally just focus on daily levels. Okay, so like literally just drawing out highs and lows of candles. Right? And they would love the inside days because you get a little bit more ranging price action, and
Yeah.
so when you get a quick move to a level, they would just normally add. They would probably have like a risk depending on the big cap they're trading. They have different risk parameters. So I think SPY was like 50 cents, and I think Apple was like a point, and they would scale in. As price would go into this like level, right? And if it does extend to about that 1 point risk that they have after it hit the level, they would either scale out and then re-add back in. But again, there was like a lot of repairing positions, and also trading it on options. You have to enter when the candle's like completely green, like scary, no wick green, right? Short. So that way you take advantage of the option premium actually spiking up, and then when it starts to like fall down, you just quickly take out. But I don't know. I mean, that type of style, it's still a little bit way over my head. It's just very hard for me to execute. But
Yeah.
that's just me,
It
though.
just takes practice though, and like
Yeah.
OTC is saying, if you do it with an insignificant size, uh, you know, there, there's the room for taking a loss is going to be pretty small, and it's still kind of engaging you in the trade, and
Mhm.
it's good practice, and that's one thing that with my trading I've been slowly evolving it to because, like I said, I scalp a lot, but then at the end of the day, when I look back and I'm like, why didn't I just leave 50 shares to just go? Like, I could have, turned it into even a swing trade for a couple of days too, and I see that. And sometimes those little 50 shares that could have been a swing trade uh, could pay more than these high risk scalps that you get in. You're risking 10 cents. You might get shaken out and take a loss, or multiple losses, and ruin your win rate. Which goes back to how this guy's saying if you've got a 50 to 70% win rate, then you should be risking a lot more on these trades. So yeah, it's interesting. This is where Jay's at, 70% or more win rate, right? So he knows based on his setups, he can uh, take bigger size, right?
Hmm.
But I think it's definitely interesting. It's not easy to have a 70% win rate.
No.
Definitely need to be trading for some time.
Yeah. I mean, yeah. I mean, I guess certain setups it's possible, but not like, I mean, the level I'm at now. No,
Yeah.
I can't
And
have like 70
one
across
thing
the board.
that Jay was kind of saying too, that I think it's great for everyone to think about is when you're trading something, you got to ask yourself, is it a setup or is it a scalp? Because if it's a setup, then you can risk more. But if it's just a scalp, like we're talking about, Leo said when we were starting, chasing into a trend.
Hmm.
And I think that, yeah, it's bad, obviously, to chase into a trend, but
Hmm.
there's actually a technique for chasing into a trend. There's a way to get in once it starts trending, and you can kind of, either wait for a pullback like this,
Pull back
and
to
then
the
you're
nine.
you're using the relative low
Yeah.
to start building a position, and then you start to bring your average cost or your risk up to the nine,
Hmm.
and then you can hold on and get into a trend.
If you
But
catch the first pullback to the nine after most latest breakout,
but let's
it's
say we're
great.
like here, and we're seeing this thing run. We want to break high a day, which was, let's say here, and we're over here, and you're like, okay, am I chasing into this trend? Am I going to get wiped out? One technique is by just risking the nine moving average and hoping that it's going to hold the nine. And
Yeah.
this technique here, this is not essentially a setup. I mean, yeah, you could say it's like a 9MA flag, but really this is a scalp. It's
Yeah.
not exactly a perfectly clean setup. We've already pulled back one time here. This is the second pullback. So on
Yeah,
a
like
trade like this, you should risk lower.
I
how
had a
often
quick.
would you risk, like, how often would you get like a 2-3 R or a home run on the second 9MA,
You
you
can
know?
a lot if it's a strong trend on the large caps.
So
Yeah.
Um, but that's
sorry.
where risking 25%. Let's say if my max risk for the day is $100. Well, that means on this one I should only risk $25. And then it goes back to the techniques of building the position, adding small size into, if you can get all the way up to here, it could be a pretty good sized trade.
Hmm. Yeah, I mean, uh, I haven't tracked it. I've just looked at my scalps, and I feel that the first 9 EMA tag after the actual breakouts best.
Yeah.
I guess for how I risk, but I mean, you risk so slim. Like, I don't know. Sometimes risk like 5 cents or whatever. Like, you get your 2R quickly. I can't handle that. It'll piss me off. It just like came back and like stopped me out, even if it's just minuscule size.
Mhm. What were you
So
saying, Mark?
I had a
Okay.
like I've been practicing this and I wanted your in my head. I haven't actually been putting a trade on it, but in my head, if you have MU right for that 1 minute, and then if you have another chart for the 5 minute for the same thing, if you could look at it at the same and go at that same time frame. When you say that, let me get my pen. That the higher time frame trend matters way more than the lower time frame. So sure, you can see it here,
Yeah.
but and then you're saying, okay, I'm buying the pullback on this, but I don't know if I'm chasing a trend. So like, let's say right here it shows a lower high, right? So you might think like, okay, is this trend about to break? It hasn't confirmed yet because hasn't broken that support right there.
Yeah.
But you would think, okay, this is the lower time frame one, but what does the higher time frame show, right? And it shows that maybe I don't know. Can you mark up like where I put that red arrow?
Yeah, you put it right here.
Yeah. So
Right here. This is the
I
lower
don't.
high.
Yeah, so as long as it hasn't like broken this trend line, right?
Mm-hmm. Yeah.
Wouldn't you say that it takes more priority, the higher time frame,
Yeah, it does.
or
And
every lower time
and
frame?
one thing with the higher time frame that I'm looking for, right, is they're leaving clues right now in how choppy, kind of difficult this market is. They're doing a lot of the same techniques over and over again. Remember how I showed you guys last on Wednesday that trap technique that they kept doing? So here's the same thing again. It's not the trap technique, but you get this slowdown, right? You get an inside bar. This is what Jay loves, right? Inside bar here. What does this inside bar do? It breaks higher. Okay. So we missed this trade. All right. That's okay. Wait for the next inside bar. And what does it do? It goes up here. It throws another inside bar right here. What does it do? It breaks up. And then what happens? It pulls back. It throws another inside bar here. This candle is inside this one. Like maybe it might have went down an extra penny, but they're holding it up to the penny here. And this inside bar breaks up. So, I mean, 3 times it gave you the exact same signal that if you would have took this, uh, this would have been a great trade here, especially if you know, if it's an inside candle, your initial risk is down here. So the way you play this is it starts to create this inside bar here. You maybe buy the dip, a dip here, and you've got your stop loss here below this previous relative low. And then as it starts to break up higher here, you're starting to add big size. And you build into the position. And then this thing works, you partial off here, it pulls back, but never back to where your actual stop loss is. And then you add in again and do the same technique over and over again. So this is how you can kind of get into a trend also, but also using the higher time frame to look for your signal. This thing was so clean, throwing these inside candles and then breaking higher. I mean, if you would have took a long right here, stop loss, your initial long, if you're building the position, could be down here, but my stop loss as this thing's breaking on the 5 minute is still like 10 cents. So my stop loss is like right here. It's not actually risking the low of the candle. I'm risking uh, the 50% of the candle, because if this thing breaks up higher and then it stuffs back down, well, it's not doing what it did here and here anymore. So it's done something different. So that's one way of using the 5 minute or higher time frames. So when you're trying to trade here and you're seeing this happen, and you're like, okay, this looks like it's going to be good. It looks like it's going to break. You definitely want to check here and say, okay, well, what does the 5 minute candle look like? Because sometimes when you're scalping, it's dropping down here, and then you're thinking, okay, I want to buy here or here, the bounce off the J lines. And then you look at the 5 minute and you're going long in the middle of a red 5 minute candle. So, all the 5 minute players can keep pushing the price down. So sometimes when you're taking a long, you have to, based off the 1 minute, you need to be checking the 5 or the 10 minute and saying, well, where am I taking this based off the higher time frame? It looks good on the 1 minute, but does it look good over here? And the answer is, if I was trying to catch this J line curl up or a J line bounce, I might have been buying it right here, and this was not actually a good spot. It just kept going down. I mean, yeah, if you were using your low a day, but I'm talking about scalping, 10-cent risk. So those are just a few thoughts.
Yeah, and also one of the things that it helps you when you use a higher time frame is it lets you know where the front side is, especially because if you go to like KVL, real quick,
KVL.
KAVL.
So here was the
Yeah.
open.
Like around the open. One of the things I was kind of undisciplined with in regards to trading KAVL short side on the front side was that when I saw something like this, I shorted partial, and then when I saw it top here, I shorted partial, but without really regarding and like without really regarding the kind of trend that was occurring. I was just looking at it through the tops, which was stupid of me. But you can see that this isn't. This is there's a trend line here.
Mm-hmm.
You can also see that there's a trend line here that's a lot better, and it's a lot more straightforward in that 5 minute than it would be on the 1 minute where it topped here, or top there, top there, top. So
So you're saying using the trend, drawing the trend line on the 5 minute, you like better than the 1 minute?
yeah, because I feel like it takes more precedence than
Mm-hmm.
using the lower time frame because the bigger time frames give you a bigger picture move, where
Yeah,
the lower time frame has just too much noise.
yeah, yeah.
So
Definitely. What I've been doing lately on big caps is I'm looking at it like this in pre-market, right? And this is the pre-market, and then what I do is I'll go and I mark this level here, which is going to be pre-market high. We've got a high volume node here, which is these two peaks. We've got the VPOC right here. And then what I do is I draw on the 5 minute this trend line up, and then I look at time and sales in the pre-market. And this is, just a tape reading technique. But what I do is, like, let's look at something that had more liquidity. So I'll look at the pre-market. Here's 9:30. Let's imagine that the stock didn't open up yet. So we're gonna go back up here, and on this stock, there was a lot more volume, let's say, or when it's really in play, there's a lot more volume. But I'll look at bookmap just like this and say, okay, what color am I seeing predominantly? And there might have been more green, you know what I'm saying? So in this case here, there could have been more green, but maybe there was actually more red and it was still trending up. So there were selling quite a bit, but it was still trending up. So I look at the pre-market kind of time and sales because these volume dots here are telling us what happened here on the time and sales, right? And the amount. So we've got also here the big time and sales right here, my bigger filtered time and sales. So that's going to show up like some of these bigger orders here. But what's nice is if I flip to a stock and then I look at the history of it, I can I can know what happened on the tape, instead of having to just read the level two and the time and sales go by just to get a feel. I can look at the history of it and what was it doing in pre-market. And just like the short pair says, it's easier to read time and sales and level two in pre-market. So I get an idea what was happening here, who was primarily buying or selling. I draw up this trend line like this, and then once we open up, it held this. It didn't ever go back down and touch it. Obviously, you can see this was kind of a gap and extension play. Not really quite a pop and fail. This was more gap and extension, I would say, towards $3. And maybe I'll draw another trend line like this and just kind of see how it all plays out.
yeah, I for me, it's been hard to trust the pre-market trend, pre-market resistance support. I know OTC doesn't even use any of that stuff. Um, so I've been drawing the dailies and the 180 resistance and support, and I actually found that had I ignored the pre-market areas that I marked up, I
Mhm.
had I had actually a daily resistance. Whoops, where's my pen? I had a daily resistance, like right there.
Yeah.
And the same thing happened with ORPH, and then the same thing happened with another stock like a day ago or 2 days ago.
Hmm.
I'm like, this
Yeah.
small cap is just way too choppy right now to even trust any of the typical levels that.
Yeah, with big caps, I can sometimes utilize the pre-market, but like to your point, I always go back and then I flip over to the 60 minute and then back to the daily, and then I start color coding it. Like, okay, so this was a 60-minute level, which could also be called a daily level. So then I'll go like this, and I'll be like, all right, blue is now this daily level, and we spent a lot of time chopping kind of here. So this 180 is going to also be a daily level in blue.
But it's one of those things where I'm starting to um like confirm in my head that if you mark up the daily, then you mark up the 15-minute, and then you mark up the pre-market, and there's just like lines all over your chart.
Mm-hmm.
What's the point of that? Like, are you gonna actually play all those lines, or are you gonna?
No, definitely not. You find the one that's working. So for instance, here was the daily level that we marked, right? It got held up right here. It didn't really hold up here. So in this case, it didn't work. And this works sometimes better on big caps, I would say, because you have more levels to kind of work off of. And then as the day is progressing, I'm deleting certain levels. Like, all right, I drew a level, let's say here, and this one just did nothing, or here, and it was, not being used. So I'll go like that. And then I'll keep the one here and see, okay, it got below this one, rejected it to the penny here,
Oh,
roughly. And then, so this wasn't the best example, but yeah. So as the day's progressing, I delete levels, and then I'm trying to find the key level that it's trading off of for that day.
yeah, but it's like one of those things where, let's say a resistance worked for like the first two times it rejected, but then that was just pretty much a setup for a longer move. And so even if you thought that resistance worked, like right there, right, you see a few wicks right there. So let's say you did short that, and it was at open, not at pre-market. Then you get caught up in a move like this.
Yeah.
Even if you use that resistance and it was working, you
Mhm.
still got caught in a bigger move that you shouldn't have been caught in. And but if you had just used a daily level or some actual stronger level rather than pre-market or a 5 minute or something like that, then you would have just ignored all of that noise and just waited for the very top, which I know OTC does well. And so I'm trying to do that better.
Mhm.
But
Uh,
you know what I
go
mean?
on, sorry. Go on.
No, that's it.
The only thing I'll say there is I do use pre-market high a day.
Yeah, that one's the only one that's significant because actually there's plays around that. But I'm talking more like this, consolidation that you see here or here. It's like it's all of that's useless.
Oh, yeah, unless you're on the backside. Unless this thing would have, the only time I would say there's value in that there is if this thing came down and then that was the new
Yeah.
point of resistance. This would be my max point of resistance up. If it reclaimed this, then I'm expecting it to make a leg back up. But if it came down here and then started pushing back up on less volume, then that would be kind of my range to trade in here, right? Because then I'm expecting it to pop and then go even further.
Okay, but for the
Yeah.
front
Sometimes on
side,
big caps, sometimes mark on big caps, I mark levels to the bottom, but then it trends up, and so none of those levels are significant. So it's just kind of, yeah, you could say it's a waste. But if it is moving down, what I'm looking for is what level is working that I ended up marking. Sometimes it's a pre-market level, sometimes it's a 60-minute or daily level. It just depends on what's happening in the day. Um, and I'm just looking for a key level that is turning from a resistance to then maybe a support, and I can play off of that long. So it just depends. I mean, I do agree. If you mark up too many levels, uh, it can get real confusing. But if you do a few, I think that you'll start to see
maybe
things line up.
maybe in the front side, right? If you wait, you don't take into consideration the resistance and support levels, especially the pre-market ones or the 15-minute level ones, in when it's still at its price discovery period. But once it starts trending up after 10 and volatility starts going lower or something like that, then you would look for these levels a little bit more, would you say? But then it's at backside, as OTC said, then you could use the pre-market levels.
Yeah, definitely. Like for instance, if this was not really an extension, but just a pop and fail through pre-market high and it's stuffing down, maybe it's going to get held up here at this level, or it goes through it and then curls up off of this 1000 MA, consolidates here for a wedge pattern, and then we get the breakdown. So just those are just some techniques for using it. To each his own.
Yeah. So I'll just pretty much do that where if it's front side, I'll only look for the daily levels to play off of. If it's backside, I can play more with the levels given in pre-market.
I mark about 3 pre-market levels and maybe 1 or 2 value zone levels, and then 1 or 2, maybe 3 uh, daily levels. And the daily levels are usually up here or down below here, and then my pre-market levels are the levels here in case we get caught in a range. So I mean, it does end up being a lot of lines, and then I delete it all, but um, sometimes it really works. I mean, for instance, on MU, just to go back, since that's what we're discussing, let's do this real quick. Here's MU based on the previous day like this. And let's see if I can mark these levels again. I can't remember what it was, but I had it, I think it was like this. Oh, I was kind of using this. So like you see VPOC right here. So I was using that. I was using the high here of this. And then we've got this peak up here too. And then I was using VPOC right here, which it doesn't look like there's a level there, but then volume point of control, when I'm kind of zoomed in, is telling me it's right here. Even if I zoom out, it's about right there, okay? And then as the day starts trading, this level wasn't that significant right here. So you can go ahead and delete that. But this level and then the VPOC level, it literally created this wedge right here on the 1 minute, like perfectly. And then as the day's trading, you could tighten it up like that, for instance, or you could move it up and say, all right, it was 91.50 is the area that I'm playing off of to 92.50. And using VPOC and then, kind of this high here, and it almost rested on it here, and I think it touched it previous day. Okay, no, it didn't. But yeah, like for instance, I marked these levels before I started trading MU on Friday, and they lined up perfectly here, and that gave me the conviction on what's happening. And here, let's see, let's go look at the trade real quick. Where was it? Yeah. So I kind of got an under over here on MU, popped up, partialed here at this level. I tried to dip down, I tried to re-add and then got out. Some ugly scalps here, trying to get a curl back up with VPOC and pre-market high. Didn't work. I tried to take the breakout here, and now breakouts are not working. So I tried a breakout trade here, not working, right? Then I need to switch to dip trades. So it goes back down. It held this level here 1 time, 2 times. I mean, kind of sloppy holding the level here at the open, but to be expected with the discovery period. So 1 time, 2 time, 3 times I go long here off of this level, which was volume point of control 91.50 that we just marked up. And then I'm partialing all the way through here. I partialed up before we even got here because I was not sure if this thing was gonna hold up. And now it's consolidating here again. I added, brought my average cost here, more partials here, and I got the whole run. So the breakout trades weren't working. So you switch to dip trades where it's waterfalling, consolidating here, and then buying the dip. So yeah, I mean, that's just that gave me that level there, VPOC, and it wasn't really a pre-market level, it was just a VPOC level, right? That gave me a lot of conviction with the trade. So yeah, so sometimes it works, most of the time it doesn't. So
Eric, like let's say when you test a certain level for multiple times,
yeah,
it's sort of bound to break. The more you test it, the less trustworthy it is. So how would you define, like, which one's gonna break? So okay, it held here, and then you buy it there. What gives you, like, it's not just gonna break down all the way down?
I mean, it very well could have.
Yeah,
And
because
so I
it's
took this on a pretty low risk.
third test.
But what I'm looking for is what was the SPY doing at this time at 10 o'clock? And if we go look at the ES, and I'm just watching the ES, I got a chart on my other screen it's just a 15-minute. I don't look at the 1 minute on the ES just because it's a lot of noise. And so this is I kind of watch it just like this, like super zoomed in here like this. And I see that we end in an indecision. I see that there's a 15-minute chart. We pop up, we make a new high, and then it fades back down. So now we're trading in this like ES range here like this. So two things are going to happen at 10 o'clock. It's either going to get below 44.90 and then maybe make a leg down because it made this huge fade down, or it could get held up here and then curl back up and I could trade in the range. I was buying here on the lower end of MU expecting the ES to hold up. And what does it do? It actually, at least for a little bit there, it popped up quite a bit here. And then it ended here, closer to 10, pops up. And so it was holding, I mean, it kind of was trending down like this, but it was holding this area and there was some buying strength for it to do this, and then they were selling into it. And MU, knowing that it was really strong the previous day, I was able to just trade it in that range, very tight risk. I took a small size here and stop loss low a day here, But when you get up to here, I mean, it's a really good trade. Any risk, any size risk,
I was
And then
just
if you-
reading some comments. Sorry to interrupt. Are you finished with what you were saying? I'm sorry.
Yep.
Reading some comments Jay Trader made on my private feed. He was pointing out some charts I posted. When I first got on the webinar here, I was mentioning that I didn't like to chase trades that are, in free fall. But he pointed out on a 1 minute chart how you have that waterfall of price going down, and then you have these consistent retraces back into the 1 minute J line. And he's saying that, you can take those kind of trades and keep your risk pretty small. And if you do it enough times and the market keeps falling, I think the odds are pretty good you're going to come out ahead.
Are you saying going longer? Like
On the short, like last week we had the short.
Mm-hmm.
I don't know.
If you take the trade with a pretty tight risk and then you get one that
Yeah,
works,
he's saying that when the candle bounces back into the J line from below and rejects, that's where you can put on a short trade, and it'll keep rotating back into the 1 minute J line as price keeps dropping.
Yeah.
And so he pointed that out. And then, just kind of like
that's
right
kind
in
of what
there.
I knew with this MU trade. I longed it here. If it was going to reject here and then come back down to my break even here, setting up, because this is a technique that happens all the time. It drops through the J lines, and then we're thinking, oh, it's just going to keep dropping. No, it's going to curl back up, reject VWAP, reject the 9, reject J lines, and then it goes down. I had enough space here to, get out at break even. Plus, I was watching time and sales here, and it was just getting held up here every time. So just to go look at that on the time and sales, here's MU, and this is the run-up that we're watching right here. I hate the big bubble at the open because it messes up the whole thing. So there's that big bubble at the open. I'm gonna just kind of go right past that, and you can see here. Here, let me zoom in a little bit more. The big bubble messes up everything.
The liquidity taken out.
First off, actually, soak here. Look at the time and sales. Like if you imagine the time and sales here printing at the open, what color was it mainly printing?
Red all the way up.
Yeah, but it's going up.
Stops.
But it's going up. So as I told you guys before, reading tape and time and sales, it's not just it's red, it's going down. No, it's red, but what is the candle doing? There's a relationship to what the candle's doing to what's printing. And this was red going up. And then it goes back down, or it chops a little bit here, and then it makes this leg down. They're selling it actually down on lower volume. There was some buying here, but then what happens when more buying comes in here at this bottom, they accumulate it, thing rips up, and then it's consolidated here. They're not letting it go any higher. It takes out this high liquidity zone, and what do we expect when it takes out the high liquidity zone? It's instantly going to 93. Well, no, you have to wait to see the reaction at 92.50. It pops up, they sell it back below 92.50, and then they're keeping it right here. They didn't let it run up here.
Right.
It was a great breakout. It would have went to
But
it.
later on, that's a reference level.
Yeah, exactly. And then so the same thing happened here that happened here. And so this is what I was watching. When we got down here, and I was looking to take this long here at 10 o'clock, the time in sales was lighting up green, 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 green. So
Price
then I
check
said,
on aisle 3.
you know, and so you just set a tight stop loss. If it doesn't work, then it just doesn't work. But I tried a breakout trade, it didn't work. I tried a breakout trade here, it didn't work. So you got to switch to dip trades then. So when it looks like it's going down, you buy it then on a dip. So that way it can bounce back up because it's so trappy, you could say, you know. Dip trades were working, and that's what's been happening lately. Breakouts have not been as effective. Dip trades have been more effective.
Well, that consolidation area, I mean, some people's plan would be is to put a buy stop order above the liquidity that just got soaked up in that consolidation area. And if it does pop, great. But if it doesn't, you didn't lose anything. So then, you know, you can just you can go
I
back
stop to drag you in if it keeps going.
Yeah.
Yeah, I don't really do that, but I know that a lot of people do that.
Yeah.
One of the other mentoring students, Richard, he used to do that all the time.
Yeah.
But
Depends on the
yeah,
market.
it can be tricky because they're just ringing stops. And in my opinion, the guy or a group of market makers, institution, whatever it is, that ran this thing up are the same people that sold it down, that ran it up again, that sold it down again, and then the move starts happening. Like, they don't want the move to just happen right out of the gate because then that's too easy. We'll all get a piece of it. They don't want you to get a piece of the move. They want the move to happen very fluid, with low resistance. So that way, if we're all in this move here and it just happens right out of the gate, we're all partialing on the way up, and it's making the stock price harder to move up. Whereas if they shake the boat and they go up, down, we're all sitting there like, okay, it's trading in a range. I got chopped up. I'm not sure what's going on. And then, you know, when it's breaking out here, you feel like, am I just chasing into it? So the stock can move a little bit easier with less retailers in it, selling at every little move up. So they like to do that on purpose. And yeah, the only reason why I took this trade long here was because I've noticed lately we've been getting this sell down into pre-market low, and then it curls up and goes. Or in this case, it was, you know, sold back down to the J lines, curled up and goes. Sold back into the J lines, curled up and went. So, and this is sloppy.
Getting one question there. So, can you please, in the bookmap, can you please go back to the opening range? So yeah, I have a question there. So if we look on the stock chart, we can see solid green candles, but in the bookmap, as you said, we are seeing red. So is there any specific reason why we are seeing red there? Because I mean, I got confused many times in many of the previous cases. I'm seeing red, and I was totally unaware of what is happening there.
Yeah, honestly, it's kind of confusing. It really is. You know, it's red, which means that they're selling on the bid, and the stock is going up. So, in my mind, it's kind of like there wasn't a lot of resistance here, so the stock was able to move up easier. But the majority of the selling that was happening was just on the bid. So that's why the dot actually turns red, right? Because there was more selling on the bid at that moment than than actual buying. but even though there was more selling, the price was still just going up. So um, I'm not really sure what the exact answer is to why it is that way. Maybe someone
Yeah.
else can kind of chime in on that, but that is the confusing thing. But the really what I'm getting at though is when you get used to reading this, there are certain days where you see it's green all day and they're building positions and accumulating, and the thing will just grind higher and move higher in a trend. And if you can see that, then you can know to hold the trade better because the buying hasn't stopped. And that's where if you enter a trade, you use the level two, you use the time and sales to give you signals on if you should even be getting out of the trade. For instance, on this one, once it starts getting going here, it's all green here, a lot of green here, some bigger selling here. But did the price go down on this? Not really. Green here, big big green buying here, some more selling here, but it's at a higher price here. So they're trying to sell it and it's not going down.
Okay. Okay.
So, it's just kind of utilizing the tape, which is, these are all the prints happening and we're seeing it here. And this is the history of it, which is pretty cool because if you're not that good at reading the level two and the tape, you have the history here. That's what makes bookmaps so useful, because you can see what was primarily happening through 10 o'clock to 11 o'clock. There was a ton of buying happening on the ask. So yeah, but to answer the question as to why does it go up and it's red, I'm not really sure. If you figure that one out, you'll become a multimillionaire.
Yeah. 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 Thanks, Ray.
Okay, guys, any other thoughts today?
Leo, I don't know if Leo's still here,
Yeah,
but
yeah, I'm here. I just had to walk by for a second.
okay. Do you use ADX in your trading? If so, I would like to find out how you use it.
Do I use what?
ADX?
No.
No? Okay. Thought you
I'm not,
did.
I'm not even sure I understand what ADX is.
It's just average directional index, just
Oh, no,
indicator, and no.
no, no.
Okay. Okay.
Okay, guys and
I had
gals.
one more question.
Yeah,
Sorry.
go ahead. And no, I was
I'm
going to
trying to
say,
get.
now's the
I've been
time.
watching a lot of level two, but I was wondering how I could expand my learning curve, and so I was wondering if there was different techniques that you guys might have used
Hmm.
specifically just for level two and tape, as to how you studied it. Because right now, all I'm doing is watching it, and then I would jot down specific things on like a OneNote or whatever,
Yeah.
and write it down so I can reread it all back later
Hmm.
and try to find a correlation between what happened here and what happened here, which has all been, there's time. I put the time in specifically so I could notice similar price behavior. What would you say, OTC or Eric or someone else who does level two and tape? How when you first started out, or what an effective study strategy would be?
Are you recording your screen?
Yeah, every day. So I watch
Okay,
it
good.
later, and then that's where I write it down. I could pause.
So I think one simple way, and I'm not an expert with the small caps, but is, for instance, let's say we're talking about a small cap, just jump right to the stub candles, or that big rip up, and then watch the level two there, and do that on every single day that you're watching a small cap, because you'll start to see a correlation between what's happening. What Jay does is he's shorting when all the selling pours in on the time and sales, and once it rips up and then it's trying to push higher and then it's stalling, and there's a price on the offer that's holding, and then he starts to see the selling pour in, and that's where he uses the technique to short it. So if you're recording your screen, skip ahead and just watch that on each day, because they say with the level two and time and sales, you can't watch it all day, unless you're a machine. And a great way to really start reading the tape better is to watch it at the key levels. For instance, just like I was saying here, I had VPOC marked down here on MU, which I showed you guys, and then I was watching this, and like the prints are happening, but I'm seeing the color of the bubbles as well. If it's a green bubble, there's going to be a bunch of green printing happening here. And so I'll watch it here, and then I'll be glancing at the level 2, and I'll see that this 9250, there is a player here that's just, it might have been just a 1 or a 2, but there's prints happening and it's holding the price. So
Right.
even though there was a bunch of people set up on the offer and they're attacking this 9250 and there's just a 1 or a 2 here, it's not budging. And that whoever this guy is at 9250 uh, is strong enough to hold up the price. So they've got enough size and enough strength to say, hey guys, I can hold the price here. It's like you're in the gym holding heavy weight. That guy was able to do that. And then you see it happening here. And then you're like, okay, this guy's holding it up. It's happened 1 time, 2 time, 3 time. Let's give it a go and see what this guy's up to. And then you just start reading the level 2 and the time and sales, and you'll just see green, 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 green. And then it starts to change. It struggled here. Maybe he was going to try to do a shakeout again right here. It's the same guy that's buying down here is shaking it here to bring it back down here to hopefully buy more. And maybe he was trying to shake it one more time here because it ripped up and then made a new 1 minute low, but then it got bought up. So it didn't like free fall back down. And then it kind of grinded lower. Once it wasn't really going to make it back below the J lines, they go back to buying. So that's what I was saying. Sometimes I think about it as like it's not really one person, but it's a group of computers that are either holding a certain price, or if a breakout fails, the computer knows to sell it down. So um, they're just accumulating a position. They want to sell it back down to this 9150 a few times to build more into the position, because if they're selling here, that was just a great trade. you know so watching at the key levels, let's say a certain price point holds up 2 times, that third time you should be watching it, and just think of if then scenarios. If it holds up and curls up, then I should see a lot of green on the tape. If it breaks down and then stays below 9150, I'll probably still see some green on the tape, but then not only will I see green on the tape, I'll see somebody showing up here that is appearing on the offer holding it down. So there might have been green here below 9150, but now it's not able to get back above 9150 and it starts breaking lower. So you might see green on the tape there with this reaction, but you want to see what is the candle doing, even though I'm seeing green on the tape. So
Yeah.
Just watching it at key areas is the best way to go. If you've got your screen recorded, then just skip to certain areas and then just focus on that.
So let me send you a screenshot of like what I typically see, and maybe like you could have an idea, because I don't necessarily look at I look at the key levels where it breaks out and all that too, but one of the things I'm trying to recognize better is like channels, right, where it tops it here in this point in time, then it tops here, but then it might top here again, or it might break out, and I want to be able to recognize whether it's topping action or whether it's breakout action. So let me
And that's
provide like
where you kind of like use, let's say you're trading, let's call this a channel, right? That is trading in here to here. Well, what you want to do is every time it gets to the top of the channel, what does it do? Does it break out and then get stuffed right below? And that's where using the time and sales and tape reading is really key. It doesn't break out, go higher, and then it goes below. I mean, it pops up and then gets stuffed back down. And then it pops up and gets stuffed back down. And then it dips down here
like
and curls. So, what?
Sorry, I didn't have my mic up. Sorry.
Oh, all good. All good. Yeah, so let's say you're trading in a channel, you're using the tape reading at these key spots of the channel, the tops and bottom of the support and resistance, because you want to see, okay, it curled up here and it didn't really break much. Let's say it was 9150, it broke lower, and then they let it break lower. they chose not to hold it up at 91.50 to the penny because that might have been too many clues. They let it break lower and then they accumulate it. And then they let it break lower again and then they accumulate it. And then on this top, they let it break higher and then they sell it back down. So what you want to be paying attention to when you're watching the channel is, are they holding it to the penny? And I'm seeing like 91.50 showing up here on the bid and it cannot move an inch below it. Or are they letting it dip down, looking like it's going to break down, trap some more short sellers that are buying the breakdown, and then they buy right back up at 91.40. So that's where, tape reading is really important, because then you can see, all right, a couple times now, they're doing the whole fake breakdown thing where they let it break down at the key level and then they buy it back up below.
Right. So I also sent you a picture. Maybe you can get some insight on that too.
Okay.
So, what do you
Just
think?
just zoom in on the tape, if you don't mind, on one of those, just any of those. Yeah. Okay. Was this the? Are you using the setup I sent you?
Yep.
Okay. Okay. So let's look at this bottom one here, right?
Okay.
This one here, this tape. Okay. So what we're looking at is roughly, this is filtered to 200 or larger, and this is filtered to 2,500 or larger. Okay. So this is your bulk. This is your whale orders, and this is just your tape. But I 1000% agree with Eric and the key levels. You want to, because if you sit here and stare at tape all day long, I mean, you'll go cross-eyed and you'll be blind in 5 years, right? If you're just sitting here staring at tape every day, all day, and your mental focus is depleted to the nth degree if you're just staring at tape in level 2 all day, right?
I'm
Because
cross-eyed now, guys.
it's fast. You're using your fast twitch mental muscles there. So the key level concept is very important, like Eric said. Like, don't stare at the tape in the level 2 the whole time. Just pay acute attention to it at key levels. But before even that, so one of the things you want to identify is, okay, when I see white prints inside the bid and I see random values like this 1379, and I see large significant figures, that right there tells me algo. Okay. How did I learn that? I use Bookmap. So I think one of the best ways to learn level 2 in tape is to use Bookmap for a certain amount of time. I personally am I guess in all aspects of life, I'm a traditionalist. So I would not continue to use Bookmap throughout my career. I'm never going to say that I won't go back to using it. But I know many traders who use it, 5 years straight, 10 years straight, and they're very successful with it. So I'm not saying that it's not a good tool. All in all, it's just not ultimately for me. But it was for me for the learning process, right? I spoke of this several weeks ago in the first one of these that I joined. So I won't go into that detail, but algos. And then the other thing you want to identify is the time, right? If you have a 1 minute candle that's pushing up, and that candle is pushing up, and then there's still 20 seconds or 30 seconds left, then that still gives them time to reject that candle, right? So time is very important. If you have less than 20 seconds here and that candle is pushing up, and then it kind of pushes up, it goes down a little, and then it reclaims that, and then it goes down a little, and then it reclaims that, and there's 10 seconds left, it's probably going to go higher. So that's pushing up, that's it pulling back, pushing up, pull back, and then closes higher, right? So that's how I use the time. So, and speed, right? What Eric was saying about levels, very important to look at the way the tape is speeding up at those levels. That tells you how many transactions are going through. So if you see price pushing up to a certain level and the tape starts speeding up really fast, but you don't see the price action just fly through, like instead it does this at that level, right? That's absorption. That's absorption, right? I call absorption at the bottom on the bid, and I call soaking at the top. They're the exact same thing. I just like to define soaking on the ask and absorption on the bid. Okay, there's no, it's the same concept.
Yeah.
But the speed of tape with price not moving, that's soaking or absorption. A lot of inside prints, the white prints, um, and reclaiming, price moving up, pushing down, reclaiming, moving up, pushing down, then going. So if you see a lot of white prints in this area and in this range, basically, that's the algo holding up the price, most likely. And then, of course, you want to look for those large orders, right? Who's dominating those large orders? So let's say this is the $4 mark and price shoots up, and then all, excuse me, all of a sudden you see a massive order come in on this tape down here, right? Well, then you want to see that the rejection happens and you have a key level, like Eric said. But if that sell off reverses and they put a bid at that key level, that was just an exchange. That's not necessarily a signal to get in. You're going to want to wait and see how the tape reacts up here again. Now, if you see that big sell, I'll delete this now and I'll start again, right? That's the level. That's the big sell. If you see that big sell and then price action moves below your key level, and then you see another big sell in here or just slightly above it, that means that seller moved down. So that's where you're identifying that on this tape or on the speed and red color of this tape, right? Because tape tells you two things. Tape tells you kind of like my order flow, right? It tells you that you have a bid and you have an ask. But on level 2, your bid is absorption and your ask is soaking, right? But on the tape, it's the opposite, right? I explained that when someone is slamming the bid, they're selling it down. And think of that as a short trader. What happens if price action goes to a top, it does the $1 million pattern, and then it shoots down, and you're trying to get in on the ask? You're not getting filled, right? So most sellers are slamming the bid. Well, that's what's causing the price to drop, right? So my point is that on the tape, I'll delete again. On the tape, if you see just a cluster of red prints and the price is going down, you can kind of confirm that that's losing its supply, the supply zone, and moving down to a demand zone, right? But you have to confirm that with reclaims, and that's why we look for, in the small cap world, we look for those shelves, right? Because what we're looking for is we see the seller engage right here, we see a big order come through or a lot of red or fast tape without any price movement right here, that's soaking, and then all of a sudden we see them push price down. And now what we want to see is that every time it comes back to this level, what do you identify? What do you think you're looking for, Mark?
Well, I usually would try to look for like some big ask, and see how it would react to that.
Yeah, you want to see that this seller is still engaged, right? That it's not a spoof, or that it's not a one-time transaction. Because at this point, you're in the trenches, right? When you have price action like this that's just chopping, you're in the trenches. This is a very, like Eric said, this is a very important level or zone of interest because you have a battle. And the question is, who's going to win? Is it going to go that way or is it going to go that way?
That's why I don't want to just watch like the breakout or the breakdown areas like that. I want to see how the tape would react in those cases, you know. But that's hard because it's like, how do you balance, right? Okay, there's a bigger wall of sellers than there is a bigger wall of bidders. Then there's a price, and then you have to look at the relative size prior to that. Then you have to look at the color of the thing, and then you have to look at the speed of the tape.
That's just going to take you time. You can't, you're asking how to fast track this. I'm basically, there's kind of a process, right? First, you got to understand what the tape says. Meaning, what do these numbers mean? What happens when it's inside the bid ask? What happens when it's below the bid? What does it mean when it's on the ask, on the bid, sorry? And then purple, right? What does it mean when it's above the ask? First, you have to identify those simple things. And then just by watching tape over and over and over and over again, then you start honing in on those finer details at the levels. And then you start comparing it to previous times that you've looked at tape. And then you have that evolution. But I mean, that's really why there's not, a bunch of gurus out there writing books on tape, and providing a lot of detail on it, because tape in level 2 is one of those things that is just, you got to shoot 10,000 free throws. You just have to shoot them over and over and over and over again until it becomes, I guess you could say, kind of subconsciously ingrained on how to read it.
Right. But in regards to like just not just watching it, well, like what other steps did you take? Like I just gave Eric um something that I've been doing, and maybe is this like something that you did where I would time specific areas in the chart that I want to see on my recording, and then I would watch all of that, and then I would jot down the specific times as to what the specific level and tape did at that time, and then I would read all of that later on and try to make connections to what happened in number one to maybe number three or something like that. Is that a studying strategy that you guys
Yeah,
might
I
do,
think
or
that's a cool way to ingrain it into more long-term memory, because sometimes when you're watching tape, it's very short-term, right? And you're trying to think back on things that happen. But as OTC is saying, after you watch it over and over for many months, then you will start to see something that's happening that you've seen before. And that's what I was saying on big caps is we'll see this sell off, but as it's selling off, it's green on the tape. And then when we get into a run, you can see them buying the whole time. And you kind of know that a trend is working because the tape is telling you. It's not like, all right, well, is this going to keep going? I'm not sure. You know, you can start to see those types of things. So yeah, I mean, this is definitely, I'd say, a good way to jot it down. I mean, the best thing though is watching tapes at the key levels and then connecting it and saying, well, I just watched this. There was a lot of green on the tape. Was it a trap or was it a holding the price and going higher?
mm,
And then you just answer those questions in your head, like, okay, well, it broke out and then it went below, but how long did it go below? Because often they let it break out and they set it back, they send it back down, and then they buy it up again before just going and breaking out and going. That's why that people say a lot of breakouts fail. It's because they do fail intentionally, so that way they can trap people. So um, just think in terms of like traps, or if it's working, and then also just combine that with the tape reading. And as I've said in our previous meetings, go on YouTube, type in time and sales, type in level 2, and watch every single video there is. And there's probably only like 50 good ones. And give yourself a couple months of watching all those videos, and in a couple months you'll hear a lot of the same things in the videos, but then you'll find these couple golden nuggets of information. And that's what I did. I went and said, for a whole month I'm studying just time and sales. For a whole month I'm studying just the level 2. For a whole month I'm just studying volume point of control and volume price analysis. And that way I can just focus on this and only think about that one thing, not everything, and perfect it.
yeah, because there's a lot of like golden nuggets in regards to just one ticker, right? I've been doing this with other tickers as well, but like, you know, I would compare that price action like, oh, okay, here's the topping action. What does that look like? But then there's also, the kind of wick here, wick there that you also, I feel like you want to recognize. And then here it broke down that support level, then immediately reclaimed, okay, that's maybe something else that you want to be able to recognize. So it's like, for me, yeah, breakouts and breakdowns are also very important. And I'm trying to recognize that too. And I think I have that one better than I do with all of this other stuff, right? But I want to be able to read the tape in those other kind of key levels.
Mm-hmm.
I think
I mean,
me at least
the
is a
way I
key
would
level.
do this is, you watch the breakout that's trying to happen here and the fail of it. And then we know that this here is a lower volume kind of pullback. So then the next key area to watch is right here as it's going back to this breakout zone and then seeing what's it going to do here. So I would be mainly watching it here at 4 and here near 7. And then you're starting to see double tops happen. You're starting to see if it breaks out and then sets up, and now it's a support. So,
Yeah,
yeah,
but like
and
one
then
thing is like you want to. For me, I feel like you should try to recognize if they're trying to hold a stock up, right? And so many times it's holding here where it could have, at least like right here, it should have, at least for me, organically could have gone down, but they propped it up.
but you'll
So I
see
want to be
like,
able to recognize just
mhm.
not where they're topping it, but also how they're holding it and
Yeah,
want to push it up even more, maybe.
yeah, no, I do agree with that because right here where it's pulling back, what I'll do is I'll pay attention to the volume. I'll see red on the tape, and could this be a whole breakdown to a bigger pullback? Yes. But if this is just a flag and it's going to keep going up higher, they want to make it look like it's going to break down and be weak here. So they're going to be selling, you know, on the bid, and it's going to be a lot of red prints here, but then the volume's actually a little bit lower, and then they try to push it up for another leg. But actually, the volume was pretty low here, and then the volume increased. The volume from here was lower than here, so this was like they're trying to do the double top, and then they get serious here on the second backside, not the first one. So yeah, I mean, watching during the pullbacks is good too, but here you don't have to hyper focus on it as much. I would say you just are going to say, okay, I know I'm going to see red prints. I'm going to pay attention to the volume, and I'm going to see where that reversal point will be to see if it's going to make another leg higher, or is this actually going to be the breakdown?
Yeah.
So in this like 5 minute span, I'm not hyper focused on the time and sales, only about here. And then here, I know in my mind, it's pulling back. I'm going to see red on the tape. Is it going to be a major pullback, or are they going to kind of make it look weak to then buy it higher? And sometimes if you're watching it well enough, you'll catch this reversal area. But even right here, this was such low volume, and then this push up was pretty low volume, and then they got a little bit more serious here, and they were able to push it down. Super low volume, but look at the size of the selling candle compared to like this one. So when I start to see the volume this low and the size of the candle is bigger than some of the green candles, but the volume is lower, this is a signal right here that the sellers are starting to uh, take control.
But this is
Yeah,
a small cap, right?
Yeah.
Yeah, so that's a trap. That's a trap. Um, and then your entries are above this level here that you marked. Like that's, see how it's tightening up,
Yeah.
trending upwards. Seller has engaged here. Seller has engaged here. But this is pure trapping. That's why they push this up over here. They sell this off, like you said, on low volume. This was very low volume because of this wick here, this wick here, and this wick here makes short sellers think, okay, this is going down. Now I have a trend line break, right? Confirmation.
Yep.
I'm going to slam the bid here, but now I'm a chaser in a low liquidity market, because what is the rigger trying to do? Ultimately, the rigger is trying to make as much money as he can at these values up here before he releases the bid. Because who's holding up the bid here? Here. The rigger is, right?
yeah.
The rigger is, right? He's basically exchanging his shares. He's selling them to someone. He's buying them from someone up here, buying their short sale, and then he's taking people's wash covers down here, and also longs getting out, right? Longs that were using this support that are getting out. He's taking that liquidity, moving it up here, exchanging it again, taking that liquidity, bringing it down, exchanging it, doing it over and over and over until he's pocketed his 500 million, whatever it is. And then finally, this is where he releases the floor. And I'm assuming the stock faded off.
rest of the day. But like in regards to like all of that we just looked at, when you guys say to watch the recording, I think trying to recognize where it breaks out or breaks down is important, but also trying to recognize fake liquidity and trapping. But where in this chart would you, OTC, specifically look for on to rewatch the recording so I don't waste my time like watching? I pretty much watched this whole thing, to be honest.
I think what points the areas that Eric pointed out, right? You want to watch above your zone and below your zone. So once you establish a bid and support, this looks like a good bid and support, right? This line and the top of this one.
Mhm.
And then it kind of compresses and this gets reduced down to maybe around here, the top of it. But I explained it. You're looking for the white tape. I almost guarantee you that the majority of the prints in here were white on that tape because that's the algo just chopping people back and forth. He's just exchanging. That's fake liquidity. When you see a lot of white prints on the tape, especially in this weak market, have you noticed that the volume at the open is really high and then the rest of the day is kind of dead?
Yeah.
That's fake liquidity. They put in a bunch of liquidity at the open of the market to hype the price up, to pump it, to push it, whichever way they're doing it. And then after that is just straight chop. How many people right now in the small cap world are getting in on these pretty decent entries, say right here, and thinking, okay, I'm going to hold the rest of the day because this thing's going to go down here. And they're not, right? Because it's all, there is fake liquidity. There's no real seller slamming here. Like you've mentioned before, right? When the rigger pushes the price up, if he artificially pushes the price up and there's no supply up here to take on his shares, then he just put so much money into that stock to push it up and now he's stuck, right? Well, the same thing goes with on the way down. If the seller doesn't have other big whales and other players to help him push the price down, he's not making the money that he wants to make in this region. And so that's the reason, because there's such little liquidity right now, that's the reason most of the fails are happening around 1300, 1400, 1500 hours, right? Because the rigger's using this area to make his money by chopping people both directions. And then once he's made his money, he'll do one more big push, take a big liquidity swipe up here, right? A clear out liquidity swipe, and then distribute it. And he's done. He throws his keyboard back, he goes off to the Hamptons, and you're stuck with the bag, the long chasers.
Yeah, that's exactly why I was talking about. Like, I think like the whole scalping hybrid longing position works well because of crap like this that I've been having to trade lately. You know, there's just too much choppiness, and I want to go for that bigger move, but at the same time, I just there's just too much choppiness that I feel like I'm missing out if I don't take the profits at the bottom of the channel. You know.
I've actually totally agree with you. It's like I think last week or 2 weeks, maybe even more. It's as well. I was trying to get like a bigger move as well to get like a good entry, you know, there or whatever, and like take them wind down. But it just, as you said, it just keeps doing that. And if I don't get like entry like up here or whatever with a little bit or average, like let's say here, I'm always getting like I'll take a small partial here, and then I'll get break even stop, and then I start fighting with this. So I get what you say, like you want to take like something there at build up again, take partials or do like a hybrid scalping or something. And I totally agree with you with the choppiness and all that.
But you guys remember, we're trained to scalp being in Jay's room. Jay does one entry, risking maybe less than 10 cents, depending on the size of the stock, or maybe 2 cents if it's a $2 stock, with that very precise entry. And then he takes off a quick partial, maybe in the same exact minute, and then he lets a position work if it's going to work. So we're trained to do that. And, that's why, Mark and Mac and even I trade like that. But what OTC said earlier is test out some of those engagement type trades with an insignificant size, maybe For you, it's one or two shares, but it teaches you how to trade with playing off of a key level and holding for greater moves. You got to practice it if you want to try to trade like that. And I'm only saying that because that's something that I'm doing to evolve my trading. Scalping is great. I can turn a profit. I can have really good consistency with it, but I know that there's still more out there. There's still more opportunity that I'm missing by only being a scalper. So that's where with my trading, I'm evolving to playing off sometimes a key level, letting a small position or insignificant size, whatever you want to call it, go. So just keep that in mind because you guys are trained to scalp. So that's what we're all doing. Uh, don't feel down on yourself if it's not working. The market's pretty difficult, right? So we're not in the same bull market, and the small caps have just not been the best for many months, I would say now. Yeah, just keep that in mind and just keep evolving your trading, and go back and mark your charts and say, okay, if I would have done this on a insignificant size, where would I have taken a trade and just let it go, and where would have my wide stop would have been? Some of those guys at SMB Capital that are trading at the prop firm, they have what they call a core size that they determine on a stock. So let's say, your max uh, share size is going to be 1,000 shares on this two or whatever $5 stock. Maybe your core size is going to be 50 or 100 shares that no matter if this thing runs up or down, you're going to just leave the core there because it keeps you engaged in the trading, and then it also uh, lets you set up for new techniques that maybe you wouldn't have taken if you weren't actually in a trade. So just a couple of more thoughts on all that.
And you said OTC end of day on that, or was that someone else?
Was that?
You wrote EOD end of day on the thing.
Yeah, because of what I just explained. Like, I mean, yeah, I I hadn't really thought about what Eric said in terms of what Jay teaches, and that's really true. Um, he takes very tight stop losses and takes quick moves. Jay's a 20-year veteran with tape and level 2, so he's able to sniper. If he wants to sniper 5 or 6 entries and exits on a small cap throughout the day, I have no doubt in my mind that he can do it. Um, but for newer people who are not as experienced with tape and level 2, that's why he has the J lines as a guide to help you visualize those small moves. Unfortunately, from what I see right now, is the 1 minute J lines. If you're early in the day, I mean, this is not a blanket statement, right? But for most tickers in small cap, if you're, let's say the J lines are here and you take this trade short, you're stuck, right? Um, because of the lack of liquidity. I think if the 5 minute J lines are above you, that's a different story. But the 1 minute J lines, it's not till it's rejected hard through and then it comes back and tests those J lines that you want to take that reversal. And for me, this rejection here has to happen on an expansion volume, showing me that they are trapping as much as they can up here and then dipping it down. But the reason is what I was saying earlier. It's that right here, there's not as many people playing the stock market, so the rigger needs all day to make his money to trap, 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 because all those traps equals big dollars, right? And then at the end of the day is when they release the bid and let it fall. And so that just requires a lot of patience, right? Because we're excited to trade. We're excited to trade, and so we want to get in here. We don't want to miss the move. I don't want to miss the move. I don't want to miss the move. But the actual move, the big move, is happening 1300 and later. I would not expect it after 1500. If you're taking it on 1500 hours, that's usually a pop into the after hours, and then it's a fade and it's a hold overnight.
Yeah.
That's a totally different trade right there, right? But you got to stick to your setups and to your plan and what you're learning, and just, you know, take what your system gives you right now. And if your system is giving you, you know, this move to here and this move to here, or this move and, you know, you get cut, and then this move to maybe some here and add a little here and then take it off here, then pay yourself. Nothing wrong with that.
Yeah, because I'm not quite like a sniper like Jay yet, so I can't. I'm not confident. I'm more confident going partial, like how Kyle's doing it, uh, than going full size in one area and then taking some partials out. I'm not a sniper like that quite yet. So when you were talking about like putting like one share here, one share there, I'm actually doing like 1/10 of my size and each bullet that I give, and I'm a lot more comfortable with that than doing it the way the Jay's been doing it. In my, as my personality is more like that anyways.
Yeah,
So,
and I mentioned that earlier at the beginning when I was talking to Eric, Leo, and Trader John at the beginning. If you have, you should be uncomfortable. If you're scared, you're oversized. If you're uncomfortable, you got to learn to work through it. The only way to grow is to be uncomfortable. Grow your size is to be uncomfortable. But if you're scared, you definitely need to size down.
I think I've gotten over the scared stage at this point. But J Trader wants me to learn to size up, so there might be some fear factor coming in as he's pushing me to put more size on, because he's watching my trading patterns, and I'm doing pretty good, I think, with the size that I'm used to working with. But I think he wants me to step it up, and that's where this, I think, I'm, like you're saying, it's like if you're scared, but I need to be more uncomfortable than scared, right?
yeah, doesn't SMG like do 20% increments? So whatever your total size is, add 20% of that, and then play with that for like a week or two and get comfortable with that.
That's what
Well,
trading is.
yeah, but with futures, it's 1, 2, 3, 4, 5 contracts, and so what I'm doing now is learning to size up with micros. So if I'm used to putting on 2 full-size contracts in the ES, which is my comfort zone, I'm now putting on maybe 8, 10 micros just to get used to the fact that I'm working with sizing and scaling. And I guess that's what I need to learn better, because I'm for a lot of years I'm just in and out all day long.
Yeah, I get that.
Okay, guys, we've gone over 2 hours. I think this is a pretty good stopping point. A lot of great information. Thanks OTC, thanks Leo, thanks Mark, thanks everybody for kind of sharing and participating. And you know, keep working on everything. Keep working on your time and sales, and working on what trading style fits for you. You know, so we're all here to learn, and it takes time. You know, as you can see, Leo's been doing it and for years, and there's still room for growth. So it's not a whole, you know, you figured it out and you're good to go. It takes a long time. So keep studying, you guys, and I think we'll call it a day here. Have a great rest of the weekend. And
I have one general question. Does J Trader do one-on-one with the mentoring students, or is that just basically his one-on-one students that he only has like?
Once a month, he does one-on-one with the mentoring students, or with a mentoring student, or sometimes it's a group one-on-one.
Okay, so yeah, I've seen some of the group. I've replayed some of the group videos that he's posted, but I was just wondering, does he advertise that in the announcements in the
Yeah,
mentoring?
he kind of tells you like an hour before it's going to happen. It's kind of hard to know exactly. But if you don't have a one-on-one set up, then message Mama Bear, and I'm sure she'll get that going for you.
I think he does have a one-on-one. I think she did send me a link for that later this month. But I was just wondering if there was like a group session once a month.
Yeah, I think it
Is there a
depends.
specific day that I can just keep an eye out for it?
No, no,
No?
because
Okay.
all the mentoring students are having one-on-ones throughout the month, and sometimes he feels like putting 3 of them together, and then we all get to sit in and watch. And he does some live tape, and kind of does things like that, answers questions, and then other times it's just a private one-on-one with you and him.
Okay. Did I miss one recently, or is it? You think there's something still coming up this month?
There will be something coming up this month.
Okay.
I don't know if we missed one over the past week or so. It's really random. He tries to announce and tag everyone on Discord, but it's easy to miss. But it's always recorded, so
Okay. All right. Well, thank you.
yeah. Have a good rest of the weekend, guys. Enjoy your family, and we'll all talk soon.
Go Rams.
Thanks, guys. See ya.
Okay.
See you guys.